After a slew of retailers, including Target and Macy's, they warned about slower sales. Brian, what have you been hearing? We were talking about, I think you just got the latest Adobe numbers. My instinct was, let's compare this to inflation. The latest inflation headline numbers, about 7%. If it's not 7%, you're probably losing ground.
Yeah, those Adobe numbers, Jared, just hit. Adobe tracks online spending for retailers. They do a great job of it. Right now, they said consumers spent a record $5.29 billion on Thanksgiving. That is only up 2.9% year over year, Jared. Right now, sales so far this year to date, the first 24 days of the holiday season, Adobe's still expecting a modest increase of only 1%. Now, that would not be good for a couple of reasons. Obviously, the number by itself is not that great, but if you're retailers right now, you go into the websites today, big door-busting deals. There's just too much inventory on retailers. So if you're not moving the stuff at a deep discount, I mean, it's not good. You're going to enter the first quarter of next year with unsold merchandise, and you're going to have to continue to discount.
And as you learned, especially from some of the latest retail earnings, they haven't been very strong. So we got a little bit of a preview of this holiday season so far. And the anecdotal reports that I've been reading are that people are checking into websites looking for deals and not necessarily buying anything. People know that inventory is there. Unless you're looking for a premium iPhone, you got that long lead time. For just about everything else, I think people are waiting for the deals. Well, guys, the deals are here, right, Sazi? It's time.
Well, you still haven't gotten me a gift. I got no email from you, Jared. You have brought me nothing. You've sent me no gift cards, but you're just staying on a little bit of a gloom and doom on this holiday season. I caught up with former Gap CEO and J. Crew CEO Mickey Drexler, and he was telling me about just what his expectations are for Black Friday, and frankly, they're not pretty.
I think Black Friday probably started a week or so ago. Everyone seems to be on sale with lots of price cuts, and been a tough go the last month or two.
Look at me, looking like a normal human there with a sweater and a pair of pants on.
You look great out there.
That's pretty good. I'll tip myself. I picked that shirt out myself on sale from Banana Republic. But look,
I'm going to have to return that shirt I got you from Banana Republic. That happens to be that very same color.
I understand you're trying to be nice, but look, let's pull up the XLY. That's the consumer discretionary ETF. That has really underperformed the S&P 500 year to date. That has not been a good performance because there's a lot of concern about margins this holiday season. And right now, we're coming into this session as well. I really like that Wall Street Journal story on Bed Bath & Beyond, a really struggling retailer, and the Journal is reporting that they're having problems getting products onto the shelves because of their financial issues. So that is one of my stops tomorrow. You know me, I love to visit these retail stores, snap some photos. I bet if I walk into a Bed Bath tomorrow, I will see a lot of empty shelves.
Yeah, I was just showing the Wi-Fi Interactive. This was our sector heat map of the year. Maybe we can put it back up. I just wanted to show that the second worst performing sector here is XLY. That is consumer discretionary. Now, conversely, staples, that is XLP, that is one of the outperformers, although it is still in the red for the year. Just want to show you what's happened over the last month. I've been showing this chart several times this week. Consumer discretionary is the worst off. You can see that over the trailing month, up about 0.1% right there. So really not feeling the love just yet. It's more of the staples names that we've been talking about where people they pretty much have to spend their money there.
Scrooge has descended on XLY.